Well, it's been called the coming silver tsunami and a demographic time bomb as the swelling numbers of elderly make up an increasing proportion of the population. How will Australia and other developed countries like ours pay for them? Will raising the pension age to 70 be enough? Well, the former Prime Minister and Treasurer Paul Keating was the chief architect of the superannuation system. He joins us now in the studio. Thanks for being here.
Pleasure, Tony.
Now, is the fundamental flaw in Australia's superannuation system that people are now living much longer than you planned for when the original people sat down and thought about this?
Yeah. Well, when we began thinking about this about 1984, thinking how life would be and the circumstance of people 30 years away, that's now, 2014, most people retired at 55 to 60 and lived till 78, 80, 81, and that was about it. But in the 30 years since, people are now living 8 to 9 years longer. So we now have...
Well, that's happened in that relatively short space of time.
In that relatively short space of time. I mean, if you take my children, both of their grandmothers are in their early to mid-90s. So there's a very good chance, for instance, women tend to live a bit longer. My girls are likely to live till 96 or 97. They may even make 100. And my son perhaps a little earlier. So we've now got two cohorts in superannuation. We have the 60 to 80 cohort and we have the 80 to 100 cohort we've got to think about. The fact is, Tony, no superannuation accumulation saved between 35 years of work. You join the workforce at 25, say, start saving till say 60 or 65. You can't save under super for 30 years or 35 years and then live another 30 years off from it. In other words, the pool can never be big enough to sustain you to your 90s. So we have superannuation Mark 1, the one I set up, which is 60 to 80, and we have now nothing in respect to superannuation Mark 2, which is 80 to 100. At the moment, nearly all of those people would rely on the pension because their superannuation lump sum will have well and truly expired by the time they touch 80.
I've got to ask you the obvious question. I mean, there were 6 years of Labor government, the Rudd-Gillard governments. Did they drop the baton here? I mean, if this was seen coming by people, well, superannuation Mark 2 should have been part of their agenda.
Well, the fact is, you see, look, the government is the default insurer with the pension. And only the government can insure across generations and pool resources. So the 80 to 100, where people no longer can earn income, are either living on some sort of government support or in a nursing home, and their confidence goes, their nerves go, their ability to manage money goes, unable to work to add to money. It means we have to start thinking constructively about how we manage a lot of people, the very big numbers of people in the 80 to 100 cohort. Now, that requires a completely new basis of thinking than anything we've been doing now by the former Labor government, as you mentioned, or the coalition.
Okay, well, you were one of the architects, as we said at the beginning, of the superannuation system, Mark 1, the one that we're talking about effectively. Yeah. If you were in government now, if you had the reins of power, what would be the first thing you would do? Well,
the key thing is adequacy. 9% is not enough to give you a replacement rate that is to, when you leave work and start living off your superannuation capital sum and income, 9% is not enough to get you a replacement rate of 70 to 75%. It has to be 12%, at least 12. You remember in the 1995 budget, I had it going to 15, but the former Labor government announced 12, and the current government said they will put a hold on 2 years of it and let it go to 12. So adequacy is the first big issue. I mean, we can't be speaking about a retirement income system which is inadequate, you know. So we've got to get to 12. And at the same time, we've got to reduce the number of people on the pension. And what happened was, I was heading for a pension system where 50% of retirees over 65 were on the pension and the rest were on self-provision under superannuation. That's now basically 81 or 82%, because in John Howard's day, he reduced the tapers or the withdrawal rates on the pension So he halved what I had. In other words, he let people keep more pension in the face of more private income.
Well, it's already the case that by 75 years of age at the moment, 80% of the population of that age group receive a full or a part pension.
Yeah, and if you get $1 of pension, you get all the PBS, the pension benefit card, and the subsidies to pharmaceuticals and the rest.
Well, and one theory about this is that people are seeing this as actually a worthwhile thing and spending whatever lump sum that they've got relatively quickly, so that it's not available.
Well, I don't think they do. I think people are very abstemious with their money. I think, look, Tony, you know, for people who've just lived on an ordinary income all their lives, having 80, 100 or 120 or 200,000 or even a little bit more in a lump sum gives them that little bit of comfort in retirement, that there's something to rely on, there's something to get them out of trouble if they get really sick, you know, to support their kids if they have to, or all the things that they do. But we can't try and pretend that, like a piece of Indian rubber, we can stretch the accumulation from 65 to 95. It can't, there's not enough of it now, and it can't go for 30 years. So we have to have, I believe, a Commonwealth insurance scheme for the 80 to 100s with a calibrated, precise product which guarantees people income support, aged care and aged accommodation. It's possible to do. It's a classic insurance thing. It's like the house on the street. You pay your insurance, but only one house burns down. What happens? One person dies earlier, but their work and savings subsidises other people who last into their late 90s. So it's a classic model for an insurance scheme, but it's got to be done in the 80 to 100 cohort while we continue to build the accumulations between 60 and 80.
Okay, but how do you pay for something like that? Because I mean, we heard Medicare Gold was an idea that the Latham opposition had. It was going to cost a huge amount of money. How much would a national elderly insurance scheme cost?
Well, a longevity levy of a kind, well, 2 or 3% of wages, and you put it in, but the Commonwealth guarantees you a calibrated, precise product. Income support, aged care, all of the time when you can't help yourself. So that's what has to happen. Now, on the 60 to 80s, the current scheme, the accumulations are not large enough. That is the biggest problem. And partly because we're only now at 9.25% and we should be at least at 12, you know. But we have arguably the best retirement income system in the world, because the compulsion means that people have put the money away where by discretion they wouldn't have, most of them, and they have something in retirement, and this has built not only better retirement incomes but a massive pool of capital which is underwritten and lowered the cost of Australian capital for capital formation in Australia.
Now, but in the past, in terms of how you pay for something like this, you've suggested several means of doing that, including one where you actually take a proportion of people's lump sum and put it aside until they're 80. Yeah, I mean, that's another method of doing it, isn't it?
Another method of doing it would be to quarantine, say, 25% of it, where preservation rules would apply, where they can't touch that till 80. But I think a better scheme is really because no commercial insurer can insure across generations, and no insurer can pool risks like the Commonwealth. The Commonwealth is in the box seat to provide the coverage from 80 to 100, and it's in the box seat because it has to pay the pension anyway, right? So we should be working now, like I did 30 years ago, for the people who are going to be in the 80 to 100 cohort, and we could do it with a classic insurance model.
I've got to say, are your Labor colleagues listening to this? Because it sounds like the kind of narrative that you often said that the previous Labor governments, the recent Labor governments, were lacking. Well,
Kevin Rudd and Wayne Swan did kick super from 9 to 12%, and I'm hoping that Joe Hockey and Tony Abbott will, after their 2-year interregnum, move on to 12, because this is the basis of our... And the other thing, see, look, Tony, not many countries, you know, in my case, a Labor government comes along, and secures the agreement of the workforce to save between 12 and 15% of their wages as savings. And then that is all privately managed, not a big government fund, all privately managed and all going into the private economy. So you show me an economy, a society which saves, and I'll show you a prosperous one.
All right, we're going to briefly just